Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a slightly cooler Thursday morning. It actually feels very nice here in Chicago this morning. Joining me today, as always, from Kansas, Director of Feed Procurement, Mr. Jake Kingsley, and from Allendale, Michigan, Dairy Market Advisor, host of Tech Talk, and, as the industry knows him, the brain from McBain, Mr. Cody Koster. Team, how are we today?
Doing very well.
Doing well, Jim. Thanks for having me.
Thank you for joining us. Heard you had a really big Tech Talk episode this week.
We had a massive Tech Talk episode, just came out yesterday. It's a definite need to watch at this point.
It's a need to watch, and for all of those grain and feed lovers out there, sounds like you spent some time on the feed market, perhaps more directly on soybeans.
We did. We hit soybeans, maybe a little bit too much, but still a good conversation. You're going to want to check it out for yourself. I guarantee it.
Okay. So if you want some technical analysis, take a deep dive into the soybean market, tune into Tech Talk. Jake, we did a mashup, the grain feed and the Tech Talk back in April, and we have people truly begging for a second round of that mashup, and those people are primarily Jake, Cody, Andy, and I. We're going to do it. We're thinking of a back-to-school episode, perhaps. So for those interested, there will be yet another grain feed and Tech Talk mashup here in the coming months. So please stay tuned. In the meantime, we have a lot to run through today. So Paige, if you would kindly timestamp the broadcast. It is Thursday morning. It is 10:30 Chicago time. The corn market has taken a little bit of a dive here this morning. So Monday, if you recall, we came off of the Friday WASDE report heading into the weekend, and Monday was a bearish move really across the grain and oilseed markets. But then the last couple of days, we've had a little bit of upticks, especially in the corn market. Not much, let's say 2 or 3 cents a day here, trying to figure out where this thing has potentially bottomed out. I think that's the million-dollar question at this point in the grain markets is, have we bottomed out? And if not, what's the bottom? Because we're still waiting to ultimately test $4 as we record. December corn is trading down 6 cents. We're right near 4.05 for December corn futures. November beans that Cody touched on in Tech Talk are trading at 10.40. That's roughly unchanged here this morning. And December meal, that not so stubborn little byproduct, is trading at $3.11 per ton. That's down about $1 per ton on the day. So, Cody, there's been a lot of chatter about the feed markets over the last couple of weeks because I feel that, at least in our industry, it's been somewhat of the focus because usually at this time, we're entering that weather market and the funds get a little jittery. We find some volatility, but that's not happening this summer, is it? Grain has just been steadily making its way down. But where's the love for milk? Why aren't we talking about milk, Cody? What are you seeing out there in the dairy market this week?
Well, Jim, that's a great question. And I think right now we're actually seeing milk a little bit higher, inching its way. August trading 19.92. And if you go and watch Tech Talk, Andy and I had actually talked about August milk. If we can get a close above 19.95 today, I think today being Thursday, it's kind of a make it or break it day. If you can get a close above 19.95, it looks like it's going to be more of a bullish trend in that market. We're in the first week of pricing for August Class 3 or Class 4. Check out Bases Loaded with Joe Schmid. We're plugging everybody today. If we can get that settle above 19.95, we're looking pretty good. If we don't, it looks like maybe another slip lower to 1950-ish type range. And I think right now, as we've talked internally, the big name of the game in the dairy industry is margins, right? Margins has been a big word, kind of thrown around. I will say on paper, when I say on paper, looking at the board right now, margins look very good going out September through December, with corn, bean meal, canola falling lower, class 3, class 4, up above $20. The thing that we have to be careful with is actual on-farm margins. There's a lot of things that the board does not take into effect. Different costs, different diesel prices, everything that goes along with actual dairy farming. So on paper, margins look good. In the real world, people who are paying the bills and making these decisions might say it's not as great as people are anticipating just because of these outside costs. Now, if we can get corn and basis on that to fall a little bit lower, milk head a little bit higher, obviously the margins get better. But I guess the point is there are just so many outside factors on this right now where we can't just say, hey, guys are making money hand over fist going out into December, because it's just blatantly not true.
Yeah, and Cody, I think it's very important to bring this up. I'm really glad that you did, because that has been a huge discussion for both the feed team, the dairy producer team, the dairy commercial team here at EverAg, and we are suddenly all focused on the margin of milk over feed costs. And again, I think it's very important to emphasize, as you did, Cody, when we look at board pricing, futures pricing out for, let's say, Ocnov Dies and Jan, Feb, March. So we're talking about that new crop feed pricing. On paper, on a screenshot at the moment, things look pretty okay. Milk versus your new crop feed costs for that time frame. However, at this moment on July 18th, we know that our dairy farmers are still feeding currently most likely much higher pricing. Not necessarily significantly higher, but maybe depending on where they are in the country and maybe the silage that they are still feeding from last year's harvest, those are notably higher prices. And especially look to where we were last summer. We had a couple drought scares last summer. You sent December 23 corn pricing up above $6 right last summer. We were trading notably higher prices. So there's a lot of folks out there that are still feeding last summer's pricing potentially, right? So at the moment, we're not feeling necessarily that yes, I have an operating margin now. I feel great. Thanks a lot, everyone. We have to emphasize that it's that new crop pricing on feed, corn trading at the board at $4. As Jake will note, where basis has come down to for some people now. Again, that's for your OC forward type of price. That appears that milk over feed margin exists, but we can't ignore what we have to deal with on labor costs, what we have to deal with on energy and fuel, what we have to deal with the current interest rate market. So I think, Cody, it's super important to bring that up. I'm very glad you did. Anything from a quick snippet from a technical perspective that we should be watching from the milk markets as we move forward? You noted that 1995 level. Is there a $20 psychological resistance being built into this market? Is there a chance that we can push through it?
I think what was $20 is more become $21 if you go a little bit farther out, September through November. We're trading up above $20 in those markets. If we get to $21, I think we're going to be met with a little bit more resistance up there, as we've tried to test that number before and we've very sharply fallen off. 3 to 4 days of moving a dollar range. And that's what's very interesting in the dairy market, especially right now, is we had these very volatile days going back the past 2 months. For the past week and a half, we have not really moved out of a 40-cent range, higher or lower. And I personally think that next week, we have milk production report coming out on Tuesday. We've got the cold storage report coming out on Thursday. And the industry leans very heavily on those USDA reports and what is published by the USDA. If there's less milk on the milk production report, generically, usually futures go higher. Cold storage, if they find a little bit more cheese, butter, whey in inventory, we tend to slip a little bit more. But those two reports are kind of a big splash in people's eyes. And right now it feels like we are really just kind of waiting and petering out here to see what those reports bring.
Okay, so we will stay tuned for those reports then starting next week and see if the market gets a little bit of activity as we run through those. So thank you for that, Cody. Greatly appreciated. And then Jake, we'll turn it to you because we did just have our report on the grain and feed side last week on Friday. And usually that July WASDE report is not a big market mover because most of the action occurred from that end of June stocks and acreage report. So that was the big one, I think, on the grain and oilseed side. And now, Cody referencing that sit and wait for the next ones. We don't get another WASDE report now until, second week of August. So really for us, it's a wait and see, I think mostly on the weather front at the moment, which right now is really not doing a whole lot to energize this market. So what have you been seeing then on the feed side of things over the last week or so?
Yeah, I mean, we've been as active in buying feed here over the last couple of weeks as I think we've been in the last several years. We're looking at corn down here. December futures are flirting with the $4 mark. You've got December soybean meal that's done just about everything it can to make a run at $300 a ton. Those are some of the lowest numbers that we've seen in 3 and 4 years in those markets. So futures are working very hard to make feed more attractive. Basis across large swaths of the Midwest has settled into some very palatable ranges. Corn basis across most of the Midwest, other than some pockets that had some obvious flood damage or some other production issues that are just very localized. Basis has been right around our initial targets, getting back to what I would consider to be historically average numbers. Soybean meal, in large part across that area, is within $5 or $10 a ton of where we would have had our first goals, and futures at this level kind of say, you know what, $5 or $10 a ton on the basis is not worth waiting around. Let's start to get something done here. So folks are buying those two commodities in significant numbers for the next crop year. It just feels like you start to run out of room to work lower there without some sort of significant change in the market to push us through those psychological thresholds of $4 and $300. Canola in the Midwest has been less attractive. Obviously, the soybean meal futures are still right there where we want them to be, but it feels like basis on that has been quite a bit firmer than we would have liked to have seen. Still, some folks are stepping in and getting it bought. I think that's okay, but they're being less aggressive than they are if they're feeding soybean meal. We're not quite seeing that basis breakdown on any of these commodities translate to the other end of the rail line. Some of these feed deficit markets, corn basis is still 30, 40, 50 cents a bushel higher than we'd like for it to be in a lot of those regions. Soybean meal is maybe $10 or $15 away from where we think it could get to. So probably the most attractive of those three commodities in some of those destination markets. But then canola is trying to make a run and be a little more competitive out there, particularly in the West, where it's a little closer to some of the production in Canada. But folks are stepping in and getting something done there. A lot of people have bought at least a quarter of their feed needs for the coming crop year, if not half or maybe a hair more. Certainly have another little layer of calls or some sort of option strategy to protect these low prices should we get some sort of a weather headline or some unexpected change that starts to bring these markets back up. I think we've been talking about probably the most bullish factor in feed markets is just how short the funds are. Managed money is near record short positions in corn and soybean meal, and any little thing that might spook them could cause them to even just trim up their positions a little bit, and you get everybody trying to leapfrog their way out of this thing, and you get the snowball effect, and all of a sudden corn futures are up a dime or 15 cents in a day on what would be considered a rather minor headline. So we're trying to protect against things like that while we've got the opportunity. Again, it just feels like you run out of room to run lower at a certain point, and you got to take advantage of some of this while we're here.
Yeah, I think that's the huge takeaway for us is that we have to take advantage of what the market has given us. We are truly seeing prices we have not seen in 3.5 to 4 years now. And when you go back over and look at it, especially a soybean meal, focusing just on the December futures contract historically, I mean, that market does not like to push through, let's say, 290 for a long period of time, really over the last maybe even 8 years. I mean, it's a pretty notable support level. So the fact that we're only $20 per ton away from what has been a very key floor over the last near decade, it does feel like, okay, we've been very patient. Jake, you noted when you started speaking there that this has been the busiest maybe 1 or 2 week stretches that you've had in quite some time, just because it's hey, this is what we've been waiting for. Let's take advantage of that. And I think it ties back to then that conversation regarding margins. We're trying to look out for folks for that October forward delivery period on your feed and are saying what the board price is giving us is the best we've seen in a really long time. Obviously basis is going to be varied region to region and dairy to dairy. So please reach out to Jake and the Feed Foundations team to talk more about that. But it does feel like a great opportunity to at least step in because you just don't know. The funds have a massive, massive net short position. Huge net short position on corn. All it takes is just a week or two of seeing one of our high pressure ridges make its way over the Rockies, sit over the I-states for a week or two and spook these guys a little bit and run that pricing back up. So again, I emphasize that we are not bullish this market, but where we are right now, I think your upside threat is probably greater than your downside potential from where things sit at the moment. Jake, just before we wrap up here, what you got on your shirt there, buddy?
This is Woo Shock from the Wichita State Shockers.
Woo Shock? Woo Shock. Can you explain what Woo Shock is for us Midwesterners that are not familiar with Woo Shock?
Well, it's a little mascot made out of a bundle of wheat.
It's a bundle of wheat.
It's the wheat state, Jim.
It's the wheat state. You've got a bundle of wheat as your mascot. That's awesome. What conference are those guys in, Jake?
They are now in the American Athletic Conference, Jim.
Very nice.
Been
Okay.
there for a
Excellent.
couple of years.
Okay. Now, will you be attending any games this year?
I think so. They're just right down the road from me now.
That's right. You are no longer in Dallas-Fort Worth. You are in Woo Shock country.
That's right.
Woo Shock country. Cody, you think you'll make your way down for a game to cheer on the what's the team name again?
The Shockers?
Oh yeah, you're gonna make your way down to cheer on the Shockers?
If Jake formally invites me, I will come down to Woo Shock at what's the stadium name?
Charles Koch Arena.
Charles Koch Arena.
I'll be there. You formally invite and I'll be there.
Consider this your formal invitation, Cody.
Perhaps there should be a grain feed tech talk mashup at one of the Woo Shock games.
If we sit close enough, they might ask us to play.
They might. Now, Cody, that would be shocking.
Oh.
I think on that note, we will wrap up for today. Excellent work focusing on these not as shocking markets at the moment, but you never know. You just never know. That's why you tune in to the Grain Feed and to Tech Talk. A big thanks to Cody, the brain from McBain, for returning to the show. Cody, thanks for being here.
Thank you for having me.
Absolutely. We'd also like to thank Corey and the Everag Insights crew for their support. Thank you to Paige and Lexi for the production magic, and thank you to the viewers for watching. The Grain Feed contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed. Woo Shock. Woo Shock.
I hate you guys.
Bro, I am coming to Kansas. Guaranteed.